Okay, let's go.
Yep.
Today, I have the fantastic opportunity to interview John Devine, strategy and execution specialist at BlockFills. And it's just a day before the SEC gives their final approval or denial of the ETF. So we'll definitely discuss that. But just a disclaimer before we delve into it, none of it should be misconstrued as a financial or legal advice. Nice to have you on the podcast.
Ivan, thanks for having me. It's great to be here. And what an exciting time to be talking, because there's a lot going on in crypto.
100%. And funnily enough, today is May 22nd. And 14 years ago, this guy called Laszlo, I always forget his last name, but he made the first Bitcoin transaction and he bought 2 pizzas for 10,000 Bitcoin. So happy International Pizza Day for all the Bitcoiners out there.
Yes, it's a day to celebrate. And we look back in time on a day like today, and we really have to applaud the innovators who were early enough into the ecosystem. They understood the concept, they put it to work, they proved the concept of peer-to-peer transactions, decentralized through the Bitcoin network. And we really have to take our hats off to them today.
100%. Do you think that anyone kept Bitcoin since then, apart from Satoshi, probably?
You know, it's interesting. At BlockFills, in the seat I sit in, where I work on strategy and execution for proprietary traders, hedge funds, whales, high net worth individuals, Bitcoin miners, I do come across people who have held Bitcoin since, honestly, going back to 2010, 2011. Now, that being said, those people are few and far between. I think a lot of early adopters of the technology, they did exit, for whatever reason. I mean, put yourself in their shoes. Having an asset appreciate in value the way it did, it'd be pretty hard to still hold on to that thing today. But there are certainly some people out there that have.
Yeah, that's amazing. So you started your career as a market maker in the Chicago
the Mercantile Exchange.
Mercantile Exchange. Yeah, thank you so much. I was thinking about it, and then you work for the Intercontinental Exchange. So
there's just some clarity there. What I did was I was a market maker. I provided bids and offers to the exchange. Both the Chicago Mercantile Exchange and the Intercontinental Exchange listed derivative products, primarily in precious metals, talking gold, copper, silver, platinum, palladium. I also provided liquidity to those markets for interest rates, swaps, the volatility index, and energy markets as well, like crude oil and natural gas.
Yeah, when did you hear about Bitcoin, and why did you decide to join the Web3 ecosystem?
Yeah, this is everyone's got an interesting journey into crypto somehow, some way. So when I was I was in grad school studying energy systems and fuels management when I first heard about Bitcoin. And the reason this was, let's call this 2013.
Yeah,
2013, 2014. And the reason this was brought to my attention was really trying to figure out ways to use energy directly to create some type of monetary value. And this concept of a decentralized peer-to-peer network that relied on an energy input for securing the network via the proof of work consensus mechanism really aligned with my thesis on energy in general, and how the base layer of money is really energy storage and transfer. So that got me to go down the rabbit hole a bit, but it wasn't until I was a professional making markets in precious metals contracts, futures and options, that I really saw Bitcoin as here to stay, so to say. When the Chicago Mercantile Exchange listed the Bitcoin futures contract in 2017, it was the writing was on the wall that this asset was really penetrating traditional Wall Street and was likely to be a disruptive marketplace for the coming decades. And that's where my interest went through the roof.
Yeah, before we delve into Bitcoin, I would like to talk about the ETF because it's such a hot topic right now.
Yeah.
And just a few days ago, James and Eric, the ETF specialist at Bloomberg, the Bitcoin boys, the way that I call them, increased their prediction to 75%. And it was 25. And I listened to an interview with Eric, and he was saying how he was keen on dropping it down to 5 or 10%, but
Yeah.
James wanted to keep it just in case there will be some political pressure. So the market went crazy. What's your take on it? And could you give me your prediction on whether it will be approved? But also, how should we trade that? Such a challenging trade to get right.
Yeah, this is a tough one, and I lead by saying that for the sole reason that the regulator in this scenario, the Securities and Exchange Commission, who is entrusted with defending market integrity, has turned out to be one of the biggest market manipulators in the entire digital asset ecosystem. So when you refer to the Bloomberg analyst predictions that, prior to this week, there was only about a 25% chance of an Ether ETF, I think the broader industry had that number closer to 10% or 5%. There would have to be a massive outlier event for this to switch. I struggle with understanding how quickly a regulator can take a 180 on such an important issue without proper public disclosure, open dialogue. To me, it seems very, I hate to keep saying the same word, but it seems manipulated, quite frankly. The hope is that the regulatory agencies that are governing financial markets within the United States are working under something that is not able to be misconstrued or manipulated, I'll say it again, by a single person or a small group of people. You want to believe that the regulator is making decisions in some type of a classical hierarchy. But from what I can read between the lines here, this 180 is coming from the absolute upper echelons of Washington, right? This is becoming a political football issue, quite frankly, where seemingly those in those in power right now, particularly on the left, have decided to view crypto as an issue for the 2024 election, and they don't want to be on the wrong side of it. The problem is you're not supposed to have a mixture of politics and regulator decision making. This is where I really have trouble digesting the news from Monday. It seems so much like backdoor conversations that are not happening in public discourse forums. More so, there are rumors being whispered amongst people who are in the know. And this is classic as to why, really Bitcoin was invented in the first place. If you go back to 2009, when we had the great financial crisis, and there were all these deals being made, between Washington and Wall Street on the 11th hour over the weekend to eventually bail out the banks without having any type of public input on the matter, which eventually led to movements like Occupy Wall Street. This is why Bitcoin was born, to get away from this model of people who are in the know having an edge over the common people, right? And this decision this rumor mill that has enthralled all of us since Monday afternoon is a classic example of these backroom deals getting done outside the public purview that benefit some and hurt a lot of people, right? So that's a very long-winded answer to really explain my perspective on or my disappointment with how the regulators have handled this whole scenario.
How are you preparing to trade this event? Is there, you don't have to disclose if you don't feel comfortable talking about it.
Sure.
But I'm wondering how retail investors can capitalize on it. And is there a way for them to do it? So I have a theory also to test with you. So for the SEC to approve the ETF, there need to be two components in place. So the first one is the 19B4, which the SEC started reviewing on Monday, and they want the applicants to make amendments. I think they were supposed to do them by today. And then the second part is S1, which needs to be approved by the Division of Corporate Finance within the SEC. And the first one needs to be approved by the Trading Markets Division in the SEC. So yeah, I think that even if the ETF gets approved, there is no way they're going to list it on Thursday. So we would need to wait for a bit longer for them to approve the S1 part to list the exchange. And then because of it, there's so many traders thinking that we'll have an exchange and it will backfire on us because they're all putting money into ETH right now. It pumped, but then we'll either sell the news or so many people will be disappointed because they're ill-informed at the moment. And then I think that we should wait. And the best way to capitalize on this trend is to probably like buy a few days after it. Or do you think that we should start accumulating now and like dollar cost average it? I don't know. What do you think is the best approach?
Yeah, this is, I don't claim to be an expert on regulatory processes. However, this feels like such a scramble. 11th hour is not even the right way to say it. 11th hour and 59 minutes is probably the better way to describe the current scenario, right? So you have all these entities who have applied for the ETF, the Ethereum ETF, really staying up all night trying to get documents sent into the regulator to be included in the queue for a potential approval. Does that provide comfort to the investment community that on a dime, we can have some of the largest asset managers and the largest crypto exchanges in the world having to keep their lawyers up till 4 a.m. filling out documents to try and keep up with this massive turnaround? It doesn't provide comfort or confidence to someone like myself, quite frankly. To me, it's a complete mess. So whatever happens, it's starting to feel like, from a political perspective, these assets are going to be facilitated and approved to trade at some point. Does that happen this week? I don't know. No one knows. You can't claim to know, right? So now we take that to a trading perspective. How do you trade this thing? Quite frankly, there's a time as a trader you got to know when to stay on the sidelines, okay? And I think when something like this, where the market is clearly being affected by decision makers at the upper echelons of government, sometimes you got to just step back and really let the market play out. I always revert to, what is your current rule set in executing within financial markets or within crypto? Stick to that rule set. Don't bend your rules because there's some FOMO happening in the market and Ether went up 20% in a day and hey, I should go chase this thing. To me, there's going to be plenty of opportunities for setups for the remainder of the year and obviously the years to come to trade these assets. Right now, it's a coin flip, quite frankly, and that's, as traders, we're always looking for ways to skew risk reward in our favor. And at the moment, I just don't see it. What I can touch on is what we've learned from this move is that the derivative markets are a good signal for potential implied volatility. What I mean by that is, if you were looking at Bitcoin and looking at Ethereum spot markets, but then took that analysis deeper into the forward markets and the options markets, you would have identified that Ethereum had a higher implied volatility than Bitcoin coming into this week. That would be anticipated with a potential denial or approval of an ETF. Also, with the legislation that's going through Congress right now with the Fit 21 Act, which we should talk on a bit. But all that being said, as traders, what we can potentially learn from this scenario is to broaden our analysis away from just the spot chart and also take into account the derivatives of these assets. Implied volatility is a big thing to be looking at. Another thing would be skew. When I talk about skew, I'm talking about the relative pricing between call options and put options. Coming into this week, we were seeing call options in the Ethereum market being priced over puts. There was more premium and more volatility being priced into the call options than put options. That's a signal for traders to use. But again, half the problem with this move is if you were not already holding Ether by Monday afternoon before this tweet came out from our Bloomberg analysts, then you missed the move, quite frankly. And this is the problem with markets that are manipulated by backroom deals and handshakes and whispers amongst people that are in the know. It really alienates the common person from being able to participate efficiently and effectively in a marketplace.
Yeah, wow, there's so many points that I want to touch upon, but I also think that it's not beneficial for the crypto community because we have recently approved the Bitcoin ETF. And even though we've seen significant inflows, it will be so much difficult for asset managers to convince companies to put more money into a new ETF. And Bitcoin is easy to understand. It's pretty much a store of value and kind of comparatively easy to sell. But I think the investment angle for Ethereum is slightly unclear because ETH is essentially a gas token and it has a lot of utility. But unless you're a crypto native, you struggle to understand why you should invest into it apart from diversifying. So what's your take on this? And do you think that we'll see significant inflows in the ETF? Because that's another problem that we'll face.
Certainly. The biggest tailwind out of this entire scenario around the ETF, both for Bitcoin and for Ethereum, is the education that's going to permeate the traditional financial environment and the traditional finance asset managers and investors. When the Bitcoin ETF became approved, it forced investment advisors, portfolio managers to really do their homework if they had not done so already, which from my perspective was a large percentage of these traditional asset managers. So if the ETF for Bitcoin spurred a push for education on what is Bitcoin, my guess and my hope and my anticipation is that same type of educational push is going to happen for Ethereum. And this is going to get super interesting because we are in the midst of a technological and a financial revolution, okay? When we think about the internet, the protocol that allows us to build web applications and transmit data freely all over the world. The investment opportunity within the internet revolution, I'll say, was at the application layer. You had opportunities to invest in companies that were building on top of the application, right? On top of the protocol, the internet protocol. For Ethereum, you now have an opportunity to invest directly at the protocol level, right? And this can be a massive edge. If we go down the curve, the growth curve for innovation in general, we are at the precipice of decentralization and tokenization of I don't want to just say everything, but the way that we move money, the way that we host assets, the way that we transmit data, and we're completely shifting in real time from a centralized model to a decentralized model. And that shift is being facilitated by protocols such as Ethereum. So the education that's going to stem from a potential Ethereum ETF is going to be massive in really reshaping the thesis around crypto, more broadly speaking, from a speculative arena for people who are looking to get rich quick to, wow, there's actual technology here that's going to change the world that we all live in and how we operate in that world and how we interact with each other within our world, right? So that's what I'm most excited about. In terms of flows, I would assume that the flows will be muted relative to Bitcoin flows, especially in terms of timing, just because of what you said. It's a deeper dive to understand the protocol layer of Ethereum and what type of applications that protocol facilitates and how those applications are going to revolutionize the way we interact with each other digitally. So there's going to be a lag. Just like with Bitcoin, there was a lag when that ETF was approved. I think it'll be a longer lag for Ethereum, but there is likely pent-up demand from asset allocators who did come into the Bitcoin ETF that will also want exposure to Ethereum.
You touched upon education, so I'm just wondering, how long do you think it would take for the crypto community to change the narrative around crypto? Because currently it's perceived as this speculative asset and
Yes.
a lot of time associated with meme coins, but there are real world utility cases like deep in real world assets and so many more. So what's your prediction? How long do you think you'll be like one generation, or do you think the FOMO will be so high that all these asset managers will be more inclined to adopt?
Yeah, this is where I get super excited because, the anticipation is once people, sophisticated investors, retail investors, mom and pop, everybody start to see this asset become normalized and adopted into, mainstream conversation, we're going to have to unravel why this asset has made it from, the whatever you want to call it, the speculative craze into the mainstream flow of information. And that's going to present an incredible opportunity for anyone who is building applications on top of these protocols. If you're building an application on top of Ethereum, you're going to have a tremendous opportunity to explain what you are, why you're building what you're building. You touched on decentralized physical infrastructure. This has got to be one of the most exciting aspects of applications that are being built on top of decentralized protocols. When someone tries to ask me, or when someone asks me to try and explain decentralized physical infrastructure, you can go a multitude of directions, but to keep it simple, I'll give you a basic example. Hive Mapper is a decentralized physical infrastructure play that is incentivizing people to drive around in their car and build a new Google Maps or a new Apple Maps, where that data, when you drive around in your car and you map out the streets, if we can map out the entire world in a decentralized way and capture and store that data in a decentralized way, we no longer have to depend on Google, a centralized entity, or Apple, a centralized entity, for information about our world, the roadways that we've built as human beings in society, that we've built all over our planet, right? Now think about what can be done. That's just an easy example to try and understand decentralized physical infrastructure. Now, if we have a decentralized Google Maps where anyone can build applications from that data, there's no longer a gatekeeper to that data. It's human ingenuity is going to unleash. We don't know where we can take this stuff, but we do know when data like mapping data is held behind centralized barriers, it restricts innovation. So that's what's extremely exciting about this opportunity to educate is, yes, educate about the protocol, educate about decentralization, educate about self-custody of these assets, but also educate about the potential applications that can be developed. And that's what's most exciting about being a person on this planet is what can we all think of together?
Yeah, Hivemapper is such a good use case. I know Ariel. I had a chat with him at Token 2049 around a month and a half ago, and invested into the project around 7-8 months ago. So it's such a good project. Yeah. Just a disclaimer on my side.
Sure. Yeah. And I'll be brief here, but like another great example of something that has traditionally been behind a centralized entity and really gate kept is access to the internet, right? I mean, you and me are talking over the internet protocol right now, but we're paying a centralized entity and they control those access points. There's a decentralized physical infrastructure project called Packet Cache, and they're figuring out ways to incentivize people to share their internet through a VPN portal. And now if we can decentralize internet access and share internet, we can really broaden the scope of the rails that we're all using to communicate and exchange value every single day, and not be so dependent on centralized players that can restrict access and hold people back or charge enormous pricing for something that is now really considered a basic necessity.
Yeah, it sounds similar to me what Helium is doing at the moment.
Similar. I recommend people both take a look at Helium, but also Packet Cache. It's like a true layer one decentralization of internet access, and it's a very impressive technology. When we talk about what are some things that can be built on these protocols to continue the innovation curve in an upward trajectory and free barriers to access from gate-capped entities.
Yeah, just to bring the conversation back to the ETF. So I believe the investors attach narrative to the price, and if we get the ETF approved, that might be the catalyst that we need for the next bull market. Or this could be the reason that we'll keep chopping and then potentially have a massive decrease. I'm not 100% sure of what will happen, and it's challenging to predict the future. But if you could make a bet, what would that be?
Yeah, it's trading around this event is not for the weak stomach, right? There's a lot of volatility here, and it's really trading on rumor. So, I go back to the rule set. If you're a successful trader, it's because you have a successful system and you follow your rules to a T. I don't really see. I mean, if I was to throw out a strategy to you that's fairly interesting, if you are able to do so in your current regulatory environment, one interesting way to play this thing is, instead of buying spot ether here, is to sell put options. When you sell a put option, and I mean cash secured put option, meaning take the money you were going to use to buy the spot asset and instead sell a put option, what that does is it obligates you to own the asset at a specific price at a specific expiration date. So I might look at the June 26 options, or if you want to keep it shorter dated, maybe the June 7th options, and you could look to sell puts. If you want to look at some type of retracement from this move, you might be selling the 3,300 strike put options for June, maybe the 3,400 strike put options. This way, in case we do sell the news, so to speak, you're not buying towards the top of this move, and you're obligating yourself instead to buy the asset at a lower price. To build further on that, again, if this aligns with your regulatory regime and what you're legally able to do so, selling that put option, you're going to generate a yield. When you sell a put option, you're going to collect premium from that sale, and oftentimes people will put that premium in their pocket for yield. But what you can also do is take that premium and buy out of the money call options. And that call option is going to grant you the right to own the asset at the strike price that you so choose. So if I was to think of a bullish strategy to play into this market, I'd be a put seller and a call buyer with that premium earned. If I was already long the asset, you could look to sell volatility if we do trade, towards 4,000, or if we break out into a level that you're happy to sell the asset at. Maybe that's the 5,000 strike. Maybe you're a seller of call options at those elevated strike prices.
Yeah, that sounds like a very interesting strategy. It took me just around 30 minutes to get this out of you.
Yeah.
I kept asking the same questions in different ways, so we finally got it.
Yeah, I'm tiptoeing here because this is just an anomaly. This is, oftentimes when markets are operating without this type of outside interference, I'm more apt to explore putting on some risk. But when you have a market being manipulated by Washington, you got to be careful.
Yeah, 100%. I definitely agree with you. I would like us to move to the Bitcoin ETF and discuss this a bit more. So I have another theory of mine, and I might be wrong, but I would love to test that with you. So the way that I look at it is that the market cap of gold ETFs is around 210 billion, and the Bitcoin will be around, I would say, I would like to argue they will be around 1/3 of the gold ETF cap, because it's so much easier to self-custody Bitcoin. And I don't fully understand what's the incentive for any of the retail investors to put money. I mean, not that they have the option, but even for companies, what's the incentive for them to do it through an ETF when they can simply do it and store everything on a cold wallet? It's obviously a bit harder, but there are so many people that are well educated on it. And I think it might be easier and better to hire someone to do that in-house than to do it through an external company. So it might not happen in the next year, but I think it's a trend that we will see. So based on this, I believe that because we currently have around 22, 23, I think, Bitcoin, 23 billion in the Bitcoin ETFs. So it can go up to, I don't know, let's say 80 billion, 88, which will be around 4x. And it's still a lot of money, but I don't think that the Bitcoin ETFs will drive the market. We need some real world utility or some real use of this technology for us to onboard the rest of the people. Do you agree with it? And I know that you touched upon the deep in projects, but do you have an opinion on real world assets and how we tokenize them, or any other interesting projects or narratives that we should keep an eye on? It's such
Yeah. Yeah, those are good. There's two parts to that question. They're both great. So to that first part, when we're talking about market capitalization of these asset classes, I tend to steer away from doing the analysis on the ETFs for both gold and for Bitcoin. I look at the net market cap of the asset, broadly speaking. So gold at current prices, you're talking about a $14 trillion asset. If you take all the above ground gold and you multiply it by the current reference rate for gold dollar, then you're going to come to about a $14 trillion market cap for gold. And if you talk about Bitcoin, we're north of $1 trillion. Is that 1.2, 1.4 trillion? It's going to be somewhere in that range, depending on what the current price of Bitcoin is. So I do my relative market cap analysis in that regard. I think Bitcoin has a chance to get to half of gold. That's really my target. Certainly in the next couple of years, that's where I'm pointing towards. I've said this publicly that my year-end target for Bitcoin is $140,000. I'm going to stick with it, and I think the initial real world use case for Bitcoin is quite simple. It's a vote against the traditional monetary system that has been set up in the United States and all over the world through central bank policy and action that regulates and facilitates the flow of fiat currency. What I mean by that is we live in a world where private corporations such as the Federal Reserve determine the supply of, I'll stick to the United States here, just determine the supply of dollars. And they do so by manipulating interest rates. And they're really, at the end of the day, encouraging and trying to facilitate the lending of dollars to the US government, which at the end of the day is the taxpayer. And the taxpayer is starting to catch on to this because they're now looking at their grocery bill, at the gas pump. They're seeing that they're not getting the same bang for their buck that they used to. And this is what we call inflation, right? And I did a little Google search. There's a Google Trends. You can search keywords on Google and see how popular those keywords have been, I think going back to 2004. And inflation as a keyword on Google has jumped. It's went from basically no one even cared or searched for it to it's a major keyword on Google now. So when people start to absorb this knowledge that their dollar is being decimated and their savings account is being taken to zero theoretically and practically, the vote out of that system is Bitcoin. So that is the mechanism people can buy and hold to defend against inflation. That's that store of value asset thesis, right? That to me for Bitcoin is good enough right now. We're seeing the protocol, the Bitcoin protocol, go through some innovation cycles. There's some layer 2 Lightning Network structures that are facilitating faster settlement of Bitcoin transactions, and this is driving payment processors and storefronts to begin accepting Bitcoin for everyday goods and services. We're also seeing tokenization occur on the Bitcoin blockchain now. There's, if you look up ordinals, which is now pretty much a buzzword, although a year and a half ago, no one knew what an ordinal was. That is the tokenization of assets on the Bitcoin blockchain. So Bitcoin at the end of the day is a big security network. If you want to tokenize an asset, let that be a treasury bond or, the deed to real estate, then choosing to tokenize that asset on the Bitcoin protocol is really opting in to piggyback on top of the most secure decentralized protocol in the world, thanks to the proof of work consensus mechanism that the protocol enables and operates. That, to me, is in terms of tokenization, still very early days on Bitcoin. Obviously, tokenization of assets has been more so prominent on the likes of Ethereum, and I could name 10 other layer 1 blockchains that are also leading that charge. But to summarize that answer, right now, the store of value component to Bitcoin is enough. It is that vote out of the system. Where are you going to store your money? Are you going to hold it in dollars in a savings account at a bank that doesn't pay you enough interest to cover inflation? Or are you going to hold your wealth and your energy? Because when we work for dollars or for any fiat currency, we're transferring our energy, right? So where am I going to store that energy transfer? And I think Bitcoin is the answer to that.
On the point of L2s, do you think that it will enable us, and especially the Lightning Network, will enable us to use Bitcoin as money? Or do you think that we should adhere to the fundamental principle of using it as a store of value?
Yeah. So for depending on what side of the issue you lean, since we are in this price discovery phase of Bitcoin, where it's upward trending due to the money printer in Washington lowering the value of dollars, increasing the value of hard assets, I don't see the appeal right now to use Bitcoin as electronic cash, so to speak, in terms of buying everyday goods and services with it. I would be more so saying, use your dollars to buy and sell goods and services right now, because those dollars are going to be depreciating anyway. So you want to spend dollars and you want to save Bitcoin, right? But once we do find a price equilibrium in Bitcoin, then and this is gonna happen over this adoption cycle of Bitcoin. Once we do have a more a less volatile asset and a more firm exchange rate for Bitcoin, and I would say like Bitcoin Gold instead of Bitcoin dollar, in that scenario, Bitcoin does become an ideal form of money that can be used to buy everyday goods and services.
You just said that over this adoption cycle, Bitcoin will find equilibrium.
Yeah.
Could you please specify this for me? Would that happen within 5, 10 years or the 4 years typical cycle?
Yeah, I think we need to get through another halving cycle, and
Okay.
we need to be watching the number of wallets that are active on the network. Bitcoin is still not highly adopted throughout the world. It's hard, as hard as it is to say in 2024, we're still early. Okay, so and that's why price is so volatile, because we are so early. The market is trying to figure out what is this asset worth on a relative basis, and I would not use dollars. I would say Bitcoin Gold. What is the relative value of this asset? What are we all going to agree upon that Bitcoin is worth? And I think that as that continues to penetrate, and we continue, for example, the money printer can't stop. We are addicted to debt. Our entire economy in the United States, and really globally, all over the developed world, is dependent on debt and government spending and printing money and passing the bill on to the next generation, or even the next 2 or 3 generations. Right now, we're spending $1 trillion a year in the United States on interest payments alone for our debt obligations. We have net debt outstanding as a country north of $34 trillion. The human mind cannot even comprehend the massive scale of this debt, okay? And it's really only happened in the last 20, 25 years, right? So this is what I mean when I say the adoption cycle. Not enough people have yet realized that there is an opt-out button to this system. And that button is buying Bitcoin. Okay. So I think once you start to see, and we can really use our dinner table to understand the adoption cycle of Bitcoin. Once that consensus at the dinner table and the conversation between aunts, uncles, parents, grandparents, once there's a consensus reached that we have a massive problem with debt and we have a massive problem on how can we store and accumulate intergenerational wealth, then we will know that Bitcoin has found some type of equilibrium, and that relative value price in dollar terms, I'll use, that's what most people speak on for this scenario. That's probably north of $1 million per Bitcoin. Okay. And that's where Satoshis are going to be coming into play. We're not talking about, moving, one Bitcoin. There's not enough. There's only 21 million of them, right? We're going to be talking about fractional Bitcoin, and that is going to become the way to spend money once that equilibrium is hit. And by then the dollar is going to be decimated and no longer the world reserve currency.
Yeah, on your point about the US government printing money, I think that they printed around 13 trillion during the pandemic, which is insane because it was like 90% of the printed money in the entire US history. It might be the wrong number.
I think you're close. You're on the right thesis. I don't know the number exactly.
Yeah, but it was insane because when I looked at it, I was like, oh my days, you printed so much money for 1 or 2 years.
Yeah.
And it's just challenging for me to even comprehend, as you said earlier. But just back to the most important question, and now we have an established relationship because we've been talking for a decent period of time. So I won't need to ask you multiple times, and it won't take me probably 30 minutes. But what's the best strategy to accumulate Bitcoin? And I don't think that Bitcoin is an asset that you should trade. That's my personal opinion. I always accumulate. I always buy the dips and dollar cost average during the bear market. Don't buy anything during the bull. Don't take any money out. But yeah, what do you think is the most effective strategy? And then also, sorry to interrupt you before you even start talking, but the most effective strategy for a Web3 native and the most effective strategy for someone that's not a full-time, maybe someone that's not in the community.
Yeah, that's a good distinction. So for most people, Bitcoin shouldn't be traded. Bitcoin should be dollar cost average purchased. Okay. Now I would actually lean into not trying to pick the cycles, bull bear. I'm more in the camp of whatever your paycheck cycle is, weekly, monthly, some of us daily, who knows? Whatever that paycheck cycle is for you, which, by the way, just going back to the fundamentals of work, you're expending your human energy at work and you're being compensated with an energy storage mechanism called a dollar that does no good at storing energy, right? So use dollars to buy goods and services, and whatever residual amount is left that you may put in your savings account at the bank, instead of doing that, buy Bitcoin and make that a regular cadence for you. And again,
I'm sorry to interrupt you, but would you say with all of it, because Bitcoin is probably not the most liquid asset, so that's the only problem that people might face if they put a lot of money into it?
A lot of money is a relative statement. I think there is, when you get a paycheck and you have fixed costs to live every single month, you pay those fixed costs in dollars, and whatever that residual savings balance you have, let that be 5% of your paycheck, 10% of your paycheck. It's going to be different for everybody. Whatever that residual balance is, instead of parking it in your savings account, buy Bitcoin. And cycle agnostic. Almost don't even look at the chart. Just buy the asset. Because if our thesis is correct that Bitcoin is the opt-out asset for this inflationary system we all live in, then there is no price that is wrong right now. In 5 years, you will look back and the price will be higher. And when I say will, I don't have certainty in saying that, but I mean based on the thesis, right? Not financial advice, certainly, but this is my opinion.
Your lawyer will love you for it, saying not financial advice.
Yes.
Would you recommend the same investment strategy to Web3 natives?
Yeah, I don't see this. I mean, there's a good distinction in terms of knowledge on, what is decentralization and permissionlessness and unconfiscatable asset, unconfiscatable asset allocation, I think would be the right way to say that. So the Web3 native individual is probably more likely to have a larger chunk of that paycheck go into some of these assets than a non-Web3 native person may be. But I think the mission is the same, no matter where you are on the knowledge curve, that we want to find a way to buy these assets now as we see the writing on the wall for the asset that we get paid in for work, which in the United States is dollars. That is not the asset you want to hold for long-term growth and storage of energy.
Yeah, 100%. Definitely agree with it. I was going to say I slightly disagree on the investment thesis because I personally spend a lot of time reading about it, and I think that everyone that's immersed in the technology should be able to do better than dollar cost averaging it. But that's probably a very ignorant standpoint and very privileged one, because I surround myself with people that talk about it. It's like my girlfriend makes a joke that it feels like it's one of the requirements to be my friend. You need to have a rudimentary knowledge about blockchain. Otherwise, you won't pass the test, because that's how I talk about. But just to bring you back to what you say earlier, I'm not 100% sure that I noted the number right, but you said that your end of year prediction for Bitcoin will be 140K. Could you just please elaborate on it and help me understand how did you come up with that number and what's the logic behind it?
Yeah, the logic stems from the relative value between Bitcoin and gold. I think gold is breaking out right here, and it goes back to everything we've been talking about on this chat here. The fiscal irresponsibility is so profound that you are now seeing governments all around the world who used to be buyers of US debt now becoming sellers of US debt and buying gold with the proceeds. Okay. This to me is the beginning of a major shift in asset allocation at the governmental level globally, and where the trade is sell US debt and buy gold. So these governments are not going to be buying Bitcoin yet, right? They're going to be buying gold. Although I do foresee in the very near future, to be frank, that governments will start buying Bitcoin as well.
Okay.
Yes.
I was going to say, who do you think will be the first government apart from El Salvador?
Yeah, I tend to think Argentina is gonna start buying Bitcoin. Again, why? Because Argentina is the classic example of hyperinflation, where the local population got decimated. If they were saving in the local fiat currency, the government was directly responsible for such decimation, and really to lead the population out of such a scenario, the government needs to lead by example and buy sound money, which is Bitcoin. So I do believe that those types of governments, when there is a shift in power in these hyperinflated economies, they will be the ones to lead the action and diversify the government treasury into some Bitcoin. So like even in the United States, we just saw some major news last week. Wisconsin bought Bitcoin.
Oh, yeah.
Right, the state of Wisconsin bought 100 million worth of Bitcoin. I think it might even been a little bit more than 100 million. So then maybe not the federal level, but then now in the United States, I'm speaking, are there going to be some states where their leadership is going to lead by example, and put their treasury into an asset like Bitcoin? I think we're going to see more of this, because it's really like a domino effect. Once the path is opened up and someone takes the lead, the more will follow. And this even comes back into like the deep rooted nature of state treasuries and the pension liabilities they all have. They're getting squeezed, owning government bonds that are not going to be able to provide the yield and the return to facilitate pension payments. They're going to have to diversify into assets like gold and I think also Bitcoin. So that's how I see the higher level playing out.
Nice. Talking about diversification, how do you think the average Web2 investor should allocate their money? And how do you think the average Web3 investor should allocate their money? And could you just give me a clear example of, let's say, I'll put 20% in Solana, 10% in ETH, the rest of it, like 70% into BTC, or whatever you think is the best way to allocate?
Yeah. So the Web2 investor, the investor who is not in the trenches, so to speak, in the development of this Web3 world that we're talking about, you can take the Warren Buffett approach, where Warren Buffett would say, don't buy single stocks, buy the index. So and that's just kind of spreading out the chips, not trying to pick individual winners and losers, but betting on the ecosystem in general. And that's probably, I mean, to be frank, start with Bitcoin. If you're a Web2 investor, you got to own Bitcoin, right? But
how much? It's like percentage wise.
Yeah, that's going to be an individual decision, as all these things are. The conservative approach would say 5% of your net assets should be in Bitcoin. Someone like myself would be saying that needs to be closer to, or that should be closer to 25% of your net assets. Eventually, once you get really into it, it's probably an even higher number than that. But just to encapsulate the idea, as someone who's just stepping into this ecosystem from an investment perspective, you start with Bitcoin. You expose yourself likely to Ethereum, and then there's a lot of different crypto assets. And if you're not spending the time to understand where you might want to have some conviction and some serious weight allocation, then you buy an index, or you buy a broader basket of the asset, and you create your own index, basically, by buying the top 20 market cap assets and then rebalancing as those market cap assets adjust through time. Now, for Web3, some of the most successful investors from traditional finance, they talk about conviction, and they talk about almost the opposite thesis from the basket approach. And that the conviction thesis is, do your homework, find something, find a protocol or a digital asset that aligns with your values in life, your passions in life, and then more importantly, the conviction in why you want to own that asset. And that conviction is going to come from your morals and from your passions, but also seeing the real world implications that a specific asset could have in terms of the growth of humanity, more broadly speaking. That's a Web3 investor is going to want to, from my perspective, be more in that conviction bracket and be super selective in that asset allocation. Maybe it's 5 assets, maybe it's 3 assets, but you're owning for.
What would you recommend?
I don't know. It's different for everybody, but I mean, conviction by definition is if there's a reason you want to own that, and if you have a strong enough thesis as to why you want to own something, why would you want to own something else?
Yeah, I completely agree. Just want to talk about a little bit about the next bull market. I dislike calling them the bull cycle, bull and bear anymore, because I think that after the approval of the ETF, it will change. But most of my friends, traders that I talk to, people that I interview, are saying that they will take some chips off the table this cycle. I keep calling it market. It's annoying. And I'm a little bit worried about it because everyone is saying it. And the OGs, people that have been in the industry from 2000 and let's say 17, they saw the like BTC chopping in 2020, lived through the bear market, 2 bear cycles. So I'm a bit worried that a lot of people will sell once Bitcoin reach 100K. And this is a number that I hear repetitively from friends, groups that I'm part of. So first of all, I think it might be a very good opportunity to buy. So I kind of want to capitalize on this trend. I'll keep looking into it, keep checking this narrative. But also, do you think that it might hinder the bull cycle? And do you think that there might be a massive correction that we've never experienced before in the middle of our bull cycle?
Yeah, this is the constant thought as an investor. You know, what is the next potential threat to my investment portfolio or a market going from a positive slope to a neutral digestive market, then to a downward sloping market, right? That's what we're, at the end of the day, what we're all concerned about is, you know, is my asset going to perform or is it going to underperform? So 100,000 is one of those numbers. It's like a mental number that, you know, people likely have. And if they've held Bitcoin for a long time, they probably have a mental number, and maybe that's it, right? It's also like on events as well. Like when the Bitcoin ETF was approved, there were sellers who had been holding Bitcoin for a long time, and the reason for selling it was, well, now an ETF has been approved. That's a massive price appreciation. I'm taking chips off the table. So you have these events that drive selling. You have hard numbers that drive selling. But at the end of the day, it goes back to conviction and why do you own this asset? Because when you sell Bitcoin, most often you're taking in dollars. We just talked about why we don't want to own dollars. We spent a long time talking about why dollars is not a suitable vehicle to store your human energy, right? And so if you're going to sell Bitcoin, what are you going to buy? And why? Are you going to convert from Bitcoin to gold and you now have a gold thesis? Or are you going to convert from Bitcoin to some new protocol that you've been studying and now have conviction on? If you're going to dollars, I really have to, I just have to question, now what? And maybe the idea is, well, I'm going to buy Bitcoin back at a lower price. Well, now you're trading Bitcoin. And many people have tried to time the market, and most people don't time the market properly, right? So the idea for this is, if you're going to sell Bitcoin, what are you going to buy? And if it's dollars, then why do you own Bitcoin right now?
Thank you so much. I want to leave it here, and I want our listeners and viewers to ask themselves, if you're going to sell Bitcoin, what are you going to buy? Thank you so much for this conversation.
Thanks, Ivan. Appreciate you having me.